Now, in the 50s in terms of decline. 55 points is a decline we're looking at right now. Let's see if those bears can truly be stomped upon. Stop trading now. Mad Money's Jim Cramer is here to talk about it. Jim, you were saying earlier we've got a bear raid, but it looks like the bulls are fighting back.
I just want to put people in the heads of hedge fund managers for a second. When I was short, in other words, when I had lots of money bet against the market, it was really imperative to come in, not in groups, because you don't want to foment a bear. That's actually a violation of the 34 Act. But you want to be able to come in at a particular moment and hit every single index hard in order to crack it. I saw that go on between 1:30 and 2:30. When the really good bears, the guys who know how to play the game and really knock it down, they never come in that early. To really beleaguer the longs, you got to come in around 2:45 and keep operating till 3:15 until people just figure there's something bad happened over the weekend. This was an amateur bear raid. They started too soon. It looks like they're going to have to pay.
All right, an amateur bear raid. Now,
well, I mean, look, they'll try to come back. They need it down. I mean, I don't think people understand this whole concept. When you're long in your big mutual fund, a lot of times what you'll do is you'll walk the market up so that you feel really great and very confident. This stuff actually happens. When you're a bear, you try to knock everything down. You try to panic people. You pick up the phone. You say that blah, blah, blah Star is going out of business this weekend and blah, blah, blah Mac is filing bankruptcy. It's very easy to spread those rumors. Is it illegal? When your firm is on the line, you tend to do questionable things. All right, Tim. I don't like it, but it's the way the game is played. I want you and your viewers to know how important it is to crack the market when you're short. All right, and here's the question, Jim. On this show today, when we're focusing on the wild ride, we looked at the two big issues, liquidity and subprime, and I think we fairly successfully debunked worries about both of them, at least in terms of some sort of an imminent crisis or collapse. You heard our subprime investor. You know I disagree on the subprime. You know I think one of these guys is going to go out of business. Well, he said, no, Jim, he agreed with you. He's staying long the bonds, which makes no sense to me whatsoever. He's making money doing it, Jim. He's bottom fishing successfully. God love him. Okay, I just think that if you know that there's going to be a bankruptcy, you want to sidestep that. Honestly, I mean, look, the guy was like 14 years old. I'm sorry. I mean, I'm 63. You know what it is, Jim? He's just more handsome than you are. He might about be your age. Do you have to get personal with me? Are you getting personal? I might. You're not here to hit me, so okay, no, look. I don't know. The guy's obviously. Hey, Jim, I want to get to a name, though, because we talked about the private equity guys. They're thrilled. They want more selling, so prices get cheaper because they're not seeing any impact on lending, the lending availability. You're saying, yes, they're going to spend money. And I think you got a name for me. Well, for what, things to buy right now? Yeah, the buyout guys are going to buy. Well, I've got to tell you, there's a stock that's down a couple of bucks today, and it's beyond me why it's down a couple of bucks. I think it's because people didn't do their homework. And it's Global Santa Fe. On the conference call, basically the guy just said, look, you know what? I've had enough. We're making the most money we've ever made. We are coining money. We have visibility as far as the eye can see. And you know what? We'll just take a consolidation here. Someone wants to do a deal, we'll do the deal. It was almost as if he's just saying, you know what, we're fed up with Wall Street. We'd rather be private. Our contracts are worth 10 times the price of our darn stock. That's what people should be looking. Read the transcript, for heaven's sake. All right, you like Global Santa Fe, and Jim, you got one more name, and I will let you pick between the two you and I discussed as possibilities here. Someone should go read the Viacom conference call, which came out in the midst of the cataclysm, where the guy actually broke all the rules and admitted that this quarter is much better than the previous quarter. You're never supposed to give that kind of forward guidance in a call. I think he was frustrated. Viacom is right. That was a good quarter, but he already said he let the cat out of the bag. He said the next quarter's great. Aaron, that's money in the bank. The guy already disclosed it. No one's watching. No one's listening to any conference call. They're too busy watching the tape, too busy watching you, too busy freaking out about subprime, too much worried about the yen carry trade, whatever the heck that is, and I've been trading for 25 years. Jim, well, we solved it. We told everyone, take a palliative. It's okay. All right, Jim Cramer. Volatility is also a code word for going down. Sleep well this weekend, my friend Jim. Why? Up next, David Faber is going to be up. David Faber is going to be up next. If Jim walks off, I don't know if he will, but of course, if you can't get enough of Jim, he's going to be around tonight, 6 and 11 o'clock Eastern. We've got buyout news for you next. That is after the break. And then around the globe, that's where the sell-off was. How do you make money there now? That's today on our Wild Ride Special. We're back.
And a quick reminder, all the recommendations expressed by Jim Cramer are solely his and are not the opinions of CNBC and may have been previously disseminated by him. Before acting on a recommendation,